The analysis of the overall market trend was kind of confirmed on Friday. After it sold off hard early last week, it bounced back up. As you can see, the NASDAQ was kind of hovering right here at the T-line. But the jobs report gapped it up through the T-line. Now, even though today's trading was bearish or soggy, it was still above the T-line. And there's one high probability statistical result is as long as you're above the T-line, it's got to be considered that you're still in an uptrend. So we're watching the T-line very closely. The same scenario can be applied to the Dow. Again, gap down, indecisive trading. Doji, indecisive trading. Hammer, indecisive trading. And then the jobs report did a very strong gap up and close above the T-line. So what we're watching now is to make sure that the trend stays above the T-line. Back below the T-line would tell us they failed to go to a new high. Now we might be in a sideways drift, possibly back down to the 50-day moving average. What was evident was the ETF, the LABU in the biotech area, traded higher even though it backed off. It gave us a good impression or a good indication that there was lots of buying still coming into the biotech sector. Our recommendation on EPZM today was based upon the fact that on Friday, it did a kicker signal back up above the T-line, giving us the expectation that this trading now will continue in an uptrend, probably at the same rate as this uptrend, doing a J-hook pattern, or even more enhanced or advanced because of the kicker signal. The fact that we could identify that the buying was coming into the biotech sector put us in situations where that was the area we wanted to be looking for the best and strongest signals. Our longer-term recommendation on BBIO was on the basis that you had a J-hook pattern setting up, that if it broke out through this level, we could anticipate wave 1, wave 2, wave 3 being the same magnitude as wave 1. There's a difference between buying candlestick signals. We're usually buying the signals when the stochastics are in the oversold area. We can usually expect a breakout of a pattern when the stochastics are much closer to the overbought area. Knowing that the biotech area is getting strength, now the candlestick investor has the opportunity to analyze which patterns, which stock chart patterns are acting the strongest. Our recommendation on DCPH was based upon kind of a little scoop pattern, Morningstar signal, telling us wave 3 was in progress. Essentially, candlestick analysis merely illustrates what's happening to investor sentiment, and when you add the T-line as an additional support factor, you dramatically improve the probabilities of being in the right place at the right time. Knowing what should happen after a candlestick signal, like a doji, the simple doji rule says if it opens positive, it's going to trade positive. If it does that, it's kind of confirming our fry pan bottom breakout, as well as telling us the 50-day moving average, which where more people are probably watching, is not acting as resistance anymore. And we know what to expect coming out of a fry pan bottom, a very strong price move. So a positive open is that 2 + 2 analysis. It's telling you the doji is confirming and the breakout through the 50 is confirming, and that there's a good possibility now you're in a high probability, high percentage move in the next trend. That'll be it. We'll see you in the chat rooms.